Time to get to our ETF spotlight this morning. We're taking a look at the Spider Energy ETF. The ticker there is the XLE. Energy is this year's best performing S&P sector. It's up more than 45%. And by the way, leading all sectors as well so far for the month of October. Natural gas, well, it's on pace for 7 straight weeks of gains. That would be its best streak since 2013. For more, let's bring in our next guest, Wolfe Research's Sam Margolin. Sam, good to have you this morning. I mean, we talked a lot about natural gas in particular, what's going on in Europe and Asia. These numbers are, frankly, kind of crazy and scary heading into the winter. What do you make of it, and what does it mean from an investment perspective?
Yeah, it's a good point. I mean, what's going on in the U.S. is nothing compared to what's happening in Europe, where prices have been at all-time highs. And there's a whole range of uncertainty because it's essentially going to come down to the weather in the winter. And there's a scenario where inventories are at normal levels, albeit on the low side, or there's a scenario in a cold winter where inventories get depleted to zero. And that could never happen. So it just means that there'd be, a lot of inflation and fuel substitution to offset that. And so because of the uncertainty and what feels like a very wide range of outcomes, I think generally the stocks that we've recommended haven't changed, right? We still have a bias to quality and a global footprint. And especially in this market, you need companies that have a lot of capacity to trade and optimize their operation. So the stock that we frequently highlight is Royal Dutch Shell, because that sort of really describes what their operation looks like, particularly on the gas side. And then, as those peers move into the power complex too, right, there's a lot of synergies between gas and power. And so it feels like a time where investors could really become more aware of the value add that's happening here.
And what about on the production side itself? I mean, we all talk and obviously know about the pressures from ESG, but it's been interesting to note how many companies, and here I'm not just talking natural gas, I'm actually talking more oil, but companies are returning capital to shareholders rather than putting it in the ground. Is that going to continue?
Yeah, and that's really a U.S. E&P phenomenon, right? The mandate for capital discipline, capital returns, and returns of cash at the expense of growth, because clearly the market was oversupplied for a really long time. So this is part of the adjustment for that. But what's happening separately, globally in terms of the current supply crunch is actually something a little bit different and a little bit more severe. I think that's generally good for the space in terms of valuation, and on a macro level, it'll prevent significant oversupply from maybe materializing again. Although I do think that there's going to be some activity response just given where we are. So we cover the service companies too, right there on the other side of industry spending. It does feel like industry spending is bottoming here, even with even with the imperative to return cash. The service companies feel like they're set up pretty well for directionally positive revenue and earnings.
What about refiners at this point? I know there had been, obviously there's sometimes some stress when you have crude, flying the way it is right now, even though it is, I guess, what are we at, a 7-year high? But Valero and such have had these big comebacks. So what does it look like for margins there? And are the stocks cheap enough right now?
Yeah, it's a great point. And I mean, outside of everything on the supply side, demand has been coming back gradually. And, we've had a bumpy road with COVID. Delta was certainly a curveball in the summer, and that affected sentiment. But even through all that, we've kind of seen this very slow, grinding recovery in demand. And it's been pretty much in a straight line, and that's what refiners are exposed to. So they should be working too. On the quarter, we're heading into earnings season. It's the best quarter in refining really since COVID. And so it does feel like the floor has been put into that sector, although in terms of weighting, on the valuation side, we prefer exposure to upstream, just because that's where a little bit more of the cash flow momentum is today. But on the refining side, we highlight Marathon Petroleum. They have a massive buyback from selling the retail business. And so, again, kind of that quality theme.
Shepard Smith here. Thanks for watching CNBC on YouTube.